Hello and welcome to Forex Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we will be discussing fundamental analysis for novices, consumer confidence. Hopefully by now you will be reviewing all the fundamental analysis for novices videos in this series. It's very comprehensive and we fully recommend you work your way through each educational video. As a trader, it is imperative that you regularly refer to an economic calendar such as this one, which are provided by most brokers. Consider this to be your Bible. Use it as a tool to plan your trades and most importantly use it to facilitate to tell you when to trade and more importantly when not to trade, especially at times of important economic data releases. The key information that you need to particularly pay attention to is the time of the event, the economic event itself, the day and date, the impact level, which typically comes as a low, medium and high, and the actual economic data release as listed by the time of event, which is usually subject to an embargo. Before this, pay particular attention to the general consensus of what the actual figure might be. This is put together by leading economists and market analysts. In addition to this, we will also be paying attention to the previous data release. So what is consumer confidence? The Consumer Confidence Index, or the CCI, is an economic barometer which tells a story via the consumer. This measure is how optimistic or pessimistic consumers are regarding their financial circumstances. If consumers are optimistic, they tend to spend more money, and if they are pessimistic, they tend to save more. If consumers are not spending, economies are failing, and if consumers are spending, it usually follows that economies are doing well. The CCI is conducted by Nielsen Inc. as a survey of 5,000 households within the United States, and it is administered by the US Conference Board on the last Tuesday of each month. Households are asked 5 questions: their view on current business conditions, their view of current employees' conditions, their expectations regarding business conditions in the next 6 months, their expectations regarding employment conditions for the next 6 months, and their expectations regarding total family income for the next 6 months. Financial markets look towards this barometer with regard to varying degrees of the fluctuations up and down. On Wednesday, the 10th of June at 1:30 a.m. BST, Australia released its Consumer Confidence Index for the month of June, which was considered to be a medium-level impact. It came out at 6.3%. No consensus was offered for the previous figure, which was 16.4%. Straight away, we noticed that the actual figure is lower than the previous figure, and we will explore this further on in the video. In Australia, the CCI is produced by the Melbourne Institute and published by the Westpac Banking Group. Countries vary slightly with regard to the questions asked of households. In Australia, for example, 1,200 adults were asked their opinions on household financial situations currently, compared to 12 months ago. Their expected household financial situation for the coming year, their anticipated economic conditions over the next coming years, their anticipated economic conditions over the next 5 years, and their buying conditions for the major household items. However, essentially the results are treated almost identically on a country-by-country basis. Upon the release of the data, traders look for an actual figure, and in this case it comes in lower than the previous. This suggests that consumer confidence is low during the month of June and below the figure released for May. Potentially this means that consumers are spending less, and this is therefore bad for the Australian economy, and we might expect a weakening of the Australian dollar against its counterparts. This is referred to as bearish. Had the figure been higher than 16.4% for May, the reverse would have been true and would have shown the economy growing. With consumers more confident and potentially spending more money, this would have been good for the Australian dollar against its counterparts. This is referred to as bullish. If you enjoyed the video, then please like and subscribe and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.